Saturday the 21st of October. We're looking here at the chart of the FTSE. A couple of service announcements first. Back in May, end of May, we had the first Krautgap A-B conference. The videos of this are now available for just £97. There's a link in the email for this. It's a PayPal link. Basically, you'll get information on Bitcoin, the Bitcoin business. I did one session on that. There's Mike Richards talking about TPA, which is a very interesting speech. There's John Potter on the business of trading, which is fascinating, and a few other people. I also speak about Krautgap, obviously, the Krautgap rules. It doesn't cover all the rules, so if you're looking to try and get the system for cheap, that won't quite work. But if you buy the video, then I'm sure a deal will be done on the whole system. So if that's of interest, please just click the link. If you want more information, then please let me know. Secondly, people have been talking about the anniversary of the 1987 crash. As you will perhaps know, I traded through that crash. I started the day with I started the week before with £600 a point of puts. So we'd just gone into a coma for about a week. It would have been worth about $250,000 back in '87, which I think is probably worth about $2.5 million in today's money. Anyway, the point I want to make is that the anniversary of the crash is not last week on the 18th. The anniversary is this coming Monday. The key thing about the '87 crash was it happened the first trading day after expiry. It's one of the reasons why I often say that expiry can see the fast action. It's happened many times since, not the only occurrence. I wouldn't treat one event in 30 years as being statistically valid by any means at all. I don't think we're going to see a crash next week, but there is some evidence, as we'll be looking at very shortly. The S&P could have peaked on Friday. The peak may not be the final peak, but it should lead to a fairly decent decline, and it could be the big one. It's not impossible. However, I wanted to make that point. So we're starting with FTSE this morning. This is the hourly chart, and so far we've seen a 1, 2, 3, splits into 5, 4. Now we've got this rather truncated affair, which looks like we should need one more burst. It needs more upside to finish it off. Ideally above 7.6, which was the previous high, was at 7.599 to be precise. Whether we'll see that, I'm not quite sure. If the peak is actually just going to wait a correction, then that could be the start of it. This could be an A. Let's clear this. It could be we're seeing an A wave and a B wave, and that now coming down a C wave. If we see that, then it would suggest that it is merely a correction, even a biggish one, and that could actually be the case for all other equity markets which we cover. But for now, I prefer to see a move to 7.6 and above to finish off this pattern. Let's go down leg to see the shorter term action. This is a 15-minute chart. So this is a corrective move, as it obviously is. This could be a final rising wedge pattern. 1, 2, 3, A, B, C, 4. Then one rally up to complete that. I guess it could be a fifth wave failure as well, in fact. So there's a range of possibilities here. If this starts accelerating downwards, then that would mean that the peak is in for the time being. And we'll have to look at, monitor that as we go, of course. All right, looking at the Dow, this counts as a wave, end of wave 4. In fact, it could be there. The pattern here is rather obscure, A, B, C, A, B, C. So that could in fact be some kind of failure there. Depends where you count it from really, but personally my preferred count is 1, 2, 3, 4, then 1, 2, 3, 4, and now 5. So let's have a look at this 5. Right, so going from the low on this chart, around 23,000, 1, 2, 3, ABC 4, 1, 2, 3, 4, 5. Looks complete on the Dow at the moment. Right, down again to the 1 minute chart. Doesn't want to go this low, but in this case it's quite interesting. 1, 2, 3, 4. 1, 2, 3, 4, 5. Now the action since was rather corrective, but we're talking about very short term. But there's certainly a case there. Dow's also seen a complete pattern, and that a peak could be in, needing confirmation. The S&P has a very similar pattern to Dow, really. I mean, slightly different, but the actual fifth wave here looks in place again. I'm going to go through it in great detail. Basically, we see sell-offs coming in on Monday, then that would be an opportunity to go short. That's what I plan to look for. Obviously, keep stops tight, risk control as usual. Even the biggest declines start in a small way. We'll get 1-2, 1-2 formations. There's always opportunities to re-enter. No reason to rush into stuff, but certainly right now there's a case that the next week might see confirmation that peaks are actually in at this point, or if not in, will be in very shortly. I'll say the best for last. The DAX saw a peak just short of 13,100. We have a 1, 2, 3, 4, 5, A, B, C. So that seems to be waves 1 and 2 already in. We then got a 1, 2, 3, 4, 5. So an A, B, and a C. Initial move up to about 13,020, followed by a sell-off. Could be an excellent short opportunity next week. In fact, any spike or whatever between these levels, above 13,000, below that peak at 13,065 odd, with stops above either here or here, might well work out extremely well. We could just go straight down, of course. Remains to be seen what happens next week, but a little blip up would be a good opportunity, I think. So pound dollar. We went short of pound dollar on the extreme stop. It's confirmed the pattern below around this level here. So well in profit at the moment. Solid spike high there. I count this as a wave 1. It's a bit of a messy count, but it seems to be the preferred count. This looks like an ABC, which is an ABC. So the downside may have resumed at this point. The alternative is that we could be seeing an A and a B, and then a C higher. That's also very possible. Let's just have a look at the wave count of this pattern here first. In fact, it counts fairly well as a 5-wave decline. So the third of a third is there. So this is a 1, 2, 3, 4, 5. Then got A, B, C, fourth wave. 1, 2, 3, 4, 5. Waves 1 and 2 are less clear, but not too bad. 1, A, B, C, maybe 2. So it does look fairly well as a 5. If so, this could be an A and a B and a C. So it maybe you have to wait for the third of a third to come in. So that's something to be aware of. But if we see a move up to around 13250 as an ABC form, then I'm looking to re-short there on this add position. I'm not closing out everything. With an extreme stop below there as well, and possibly below here. So that could be a really fast move. That would be good news. All right, finally Bitcoin. Right, we've got the 1, 2, then a 1, 2, 3, 4, and the fifth wave. Notice how the waves are all subdividing very nicely. The positive waves up, 5s, the corrected waves in 3s. On a long chart, this is by far the biggest wave. It counts well as wave 3. So we have a wave, a wave 3 peak there. We have a correction, a wave 4 correction. Quite short in terms of time, but in fact it doesn't fit too badly with this decline. Sorry for this rally. Now we've got a 1, 2, 1, 2, 3, 4, and a 5. Fifth not over yet. So we're still due higher prices once this rally is over. Let's go down a little. Now this is wave 4 of 3 of 5. So we've got 1, 2, 3 could be over, but there's still a fifth wave to come. So we're going to see probably 6.5 at least. And this is we're still due a wave for after that for higher prices. So no sign of a peak at this point in time. There's some very interesting stats on Bitcoin, or ideas on Bitcoin. I was listening to James Alturka, that's the right expression, sorry, pronunciation. He reckons that there are 3 phases to all bull markets. Quite obviously that's the case. Early adopters, nerds if you like. Then you get the smart money coming in, and you have these rich nerds who are holding on. That's the case now already. And then you get the masses joining in. I read somewhere that less than 0.1% of the population is currently involved in Bitcoin. So the masses are not involved right now. And if you look at the supply of Bitcoin, which is of course is now leveling out. It was hyperbolic supply up to now. It's now leveling out. So supply is diminishing. There's still a massive demand building, and all those people who aren't involved yet. So one person out of 1,000 are currently involved. So there's 999 people still due to get involved. So demand is almost bound to increase. I mean, price does that all by itself. Supply is leveling out, you know, if you have limited supply and limitless demand, then, as James says at one of his points, you get a price explosion. So on that basis, yeah, Bitcoin's got a long way to go yet. But there will be corrections. We're seeing them very regularly, because the way this market moves, it does what other markets do in years and days and weeks. And once this fifth wave is in, there'll be another correction. But it's going to keep going up for some time to come. I don't think we're going to see these massive corrections people are talking about. You know, the buyers will come in and just swamp it, I think. Anyway, on that note, I'll call today. I hope that interesting and useful. Back to report on Tuesday morning subscribers. Have a great weekend. Thanks for listening, and bye for now.